Well, folks, if you're really into stock market investing, this is the video for you. So in this video here today, I'm going to explain exactly what's going on in the stock market right now, why the stock market's about to flip, what the stock market's going to do, not just in the next month, but over the next year, in my opinion, and explain all this into detail. And you're going to hear a little bit of a different take than you'll pretty much hear anywhere else in terms of like how I view the market, what I believe is actually going on in the market right now, what I believe has been transpiring throughout this year, and what I think is going to transpire into the next year. And so yeah, this was kind of a beast video for me to put together here today, guys. There's a lot of slides that go into this one. I want to explain into detail my exact views on where I think the stock market's going and what I think is going to happen here, okay? So I hope you guys enjoy this. As always, all I ask in return is that you hit that subscribe button. If you're not subscribed to the channel, make sure you go ahead and subscribe. It is absolutely free to do so. And lastly, for anybody watching this video on Cyber Monday, which is only going to be the first, let's say, 30,000 people that are going to watch this video. Basically, we still got the massive Black Friday, Cyber Monday sale going on. That does end tonight. So anybody that's watching this video on Tuesday and past, that deal will already be over. And you have to wait till next year. But for anybody that sees this video before that, check out pinned comment down there to join my private stock group, learn directly from me, the 7-figure coaches, and get in the private Discord chat and all those sorts of things, okay? Alrighty, guys, so let's get into this. We got a lot to get into in this video. This is actually a video I'm looking really forward to recording here because it's a beast, and I'm really going to share a lot of in-depth thoughts, okay? So if we look at what has 2021 been for the most part, it's been a year of, I would call it uncertainty. There's a lot of uncertainty. I would call it one of the higher levels of uncertainty I've seen. Because, and it doesn't, when you have a very uncertain market, it doesn't mean the stock market has to go down. I think that's what some folks get confused about. They say, well, if there's an uncertain market, that means the stock market has to be tanking. Not necessarily. But let's be honest, we have a massive amount of uncertainty. What is the Fed going to do? Everybody's always wondering, what's the Fed going to do? Are they going to do this? Are they going to do that, right? Are they hawkish? Are they going to taper? Like, what's the Fed up to? So that's always a big, big thing. You have the uncertainty around Rona still, right? A new variant, this and that. Could the economy ever get shut down? Will countries have to ever close again? Things like that. That's a level of uncertainty. You obviously have the uncertainty of the world economy opening back up, right? 2020 was a year where a lot of the world economy had to close. And now as we open back up, people are kind of viewing this and like, okay, what's going to happen here? Like, is everything going to be right back to normal? Is this going to be like a multi-year kind of get back to where we used to be? A lot of folks are wondering that. Then you have the uncertainty around inflation, which has been off the charts. Like inflation in 2021 has been absolutely insane, okay? Absolutely insane has inflation been. And so you have all these various factors, and it makes folks definitely very uncertain. And when I say folks, it's not necessarily just, the average Joe retail investor. All I'm talking about, this makes hedge funds uncertain, fund managers in general, high net worth individuals. They're looking at all this, and they're a little uncertain, okay? And you can tell folks are uncertain based upon the activity. Let me show you something, okay? Where does money like to go when it hides out? Well, obviously savings account can be a place, but if you're not going to hide it in a savings account because you make no money, you're going to put it into a stock like Apple, right? And even though Apple had a pretty good 2020 because they got a huge boost up from everybody ordering laptops and iPads and all the work from home things, right, that became more necessary than ever before. That was a huge boom for Apple. And so even though this year you haven't had that boom, still, like, money likes to hide out in Apple. You know why? Because it's the biggest, most profitable company in the entire world. They're seen as stable. They're seen as that company that they're going to come out with new iPhones next year, and a certain amount of people are going to buy those, and this product and that product. And it doesn't have to put up the best growth in the world. It's just money likes to flock there. And that's why you see a P ratio of 28 on this stock right now, which is pretty high based upon where Apple usually trades at the past decade. And if you look at the forward P, also pretty high based upon any valuation you looked at this company at in the past decade. They're much higher than they're normally at. P ratio, forward P ratio, and price to sales ratio. Okay? And so money has flocked to a stock like Apple because it likes to hide out in a time of uncertainty, right? Same exact thing with Mr. Softy, Microsoft, pushing a PE of 37 on this stock, right? A lot of folks just say, hey man, if I'm a little uncertain, I could put my money in a savings account, or I could just put my money in Microsoft stock. And so a lot of folks say, I'm going to put my money in Microsoft stock because I feel like that's stable. And look what's happened with that stock. It's had a tremendous year. This is year to date. That stock is $200, maybe a little over $200. It's $336 today. It's had a great year. And it hasn't just been because Microsoft's reported, respectable numbers, which Microsoft always reports respectable numbers, right? It's because money has flocked there because folks are uncertain. They see all this inflation and like Microsoft's a big dog and they're going to likely be a good company regardless of inflation, deflation, any sort of environment. Microsoft's going to do well. Same thing with a company like Apple. You look at Google, look at this stock this year, right? I mean, this stock is $1,700 or so going into the year. It's approaching $3,000 a share now. There's another one of those stocks that folks look at and they're like, well, Google, YouTube, Android, all the businesses Google has. And this is just one of those stocks that folks like to park money in and say, hey, high probability I make money on this, right? And just the flat out honest truth is usually, at least how it's been in the past, decade plus, you put money in anything big tech related, Google, Apple, Microsoft, these sorts of stocks, you're going to make money, right? And if you're in a period of uncertainty, even more folks want to put money in these sorts of stocks because they feel like, well, I'm probably going to make money there and I'm not taking as big of a risk in these sorts of stocks. That's the way a lot of folks view them, okay? Now, that is very, very key. Because what else do we see? We see the exact correlation in the indexes. Look at the Dow Jones Industrial Average. Going into this year, we're a little over 30,000, 35,000 now on the Dow Jones Industrial Average. Look at S&P 500. 3,700 kind of going into the year, 4,600 now for the S&P 500. And you even look at some of these other stocks that are what I would call big tech nowadays, that aren't seen as big of a risk. Now, back in the day, a stock like NVIDIA would have been seen as a big, big risk many years ago. It's not seen like that anymore. NVIDIA is actually seen as a stock that a lot of folks like to park money in, believe it or not. And look at how well that stock has done from $132 roughly entering this year to $333 now, over $800 billion market cap. A lot of folks look at a stock like NVIDIA and they're like, let me park my money in NVIDIA stock, right? And even this one, good old Tesla, my Tesla. Even this one has become one of those stocks that a lot of folks look at now, and they don't just view it as it's a growth stock, right? And the excitement around all the vehicles they sell and things like that, and it's like, well, Tesla's got these amazing numbers. It's also the fact that Tesla is over $1 trillion market cap now, and a lot of folks like to say, let me park money in Tesla. I mean, who would ever thought that would be the day, right? That Tesla is actually seen as a stock of some folks view it as stability, right? And so obviously a stock like Tesla has been another one where folks, park money. And let's be very, very clear about this. Don't just think, well, it's a Cathie Wood stock, Tesla is, and so all Cathie Wood stocks must be doing great in this sort of market. No. If you go through a lot of Cathie Wood's biggest positions, they're down substantially from 52-week highs. You look at something like Roku, you look at Teladoc, the second biggest position for Cathie Wood in her main ARK fund, right? Look what's happened to that stock. That was over $300, 9 months ago or so. That stock today is just over $100. You look at Zoom stock, and you look at a lot of Cathie Wood stocks, they're not doing well. So don't just think, well, Tesla's going up because it's a Cathie Wood stock. No, that's not really how this works. But it has been a stock that a lot of folks have wanted to flock money to, all right? Now, meanwhile, what is going on in the Russell? Nothing. Well, I mean, we looked at the Dow, we looked at the S&P 500, we looked at the NASDAQ 100. Man, those are thriving. Large caps just get larger and larger, right? Valuations have gone through the roof on most of those stocks, price to sales ratios, PE ratios. And meanwhile, what's going on in the Russell? No one wants a piece of the Russell. No one wants really the small caps for the most part. And a lot of the reason goes back to uncertainty. And if you're a smaller company or folks view smaller stocks under $10 billion type market caps, especially under $5 billion type market caps, people view those as riskier plays. Whether that's right or wrong, I'm not here to debate that. But that is factual. That's the way most fund managers look at this and high net worth individuals. They say, that's a smaller company. I think that's a risk in this sort of environment where we got a ton of uncertainty. I would much rather be an Apple stock, and something like that. And that's been the play in 2021. Avoid those sorts of stocks, sell those sorts of stocks, and pump the money into the ultra large caps, right? And you can see this in the facts, right? It's one thing to debate things and have opinions. It's a whole nother when you bring up the facts. And so that's why I like to try to, get into a video like this where I'm giving my opinion on what I believe is going on, but we're also going to get into the facts on what is going on. And the fact is forward P ratios for large caps have gone insane. We're at a 20.8. This is forward P, so this isn't looking backwards. This is looking over the next year. They've gone nuts, right? I mean, we're trading at the highest we traded at since, around 2001 roughly. And you look at any time in modern history, large caps have never been trading this rich. The reason these large caps are trading so rich is because of this uncertainty and folks looking to, where the heck do I park my money? Let me go ahead and park money in large cap stocks because they feel they're safe there and they'll probably make money there, right? And so now this just shows you large caps have gone absolutely insane. And factually, on the flip side, you look at S&P 600 small caps trading near the cheapest they have traded at in decades, right? I mean, it's absolutely extraordinary. We're at a 14.8. There could definitely be some more tax loss harvesting over this next month. That could push us down to levels that, we saw this a little bit at the very, very end of 2018. There was a huge market sell-off essentially in October, November, December of 2018, if you're around for that. Big sell-off. It pushed almost all stocks, but especially small caps down to some insane levels. So we got down there for just a bit there, right? And then other than that, you got to go basically all the way back to 2011 to see small caps trading at this sort of valuation, which if you're looking at this, just understand there's a huge opportunity in the market, okay? A massive opportunity, especially if these stocks continue to get pushed down over the course of next month, which is definitely a real possibility. This is definitely a real possibility because remember, when it comes to tax loss harvesting, that is basically something that goes on in kind of mid to late November, but also for the first several weeks of December, and sometimes all the way up until the last week of December as well, where people are looking at their positions and saying, hey, I'm down a bunch on this one, and most people that have been in small caps over this year are down. Let me go ahead and write this off against some gain I got over here so I don't have to pay a big tax liability, right? It's a strategy that so many fund managers and so many investors in general basically employ, and so don't be surprised if this number goes, even as crazy as it sounds, it could go actually even lower over the next several weeks, okay? Down to some levels, like I said, we haven't been to in a decade, which is great news. The last chart I showed you, that's scary. When you go back and you're like, oh man, large caps are trading, the richest they've traded in 2 decades, that's scary. And then on the flip side, you see the small cap opportunity that is, above basically the most amazing opportunity we've seen in small caps in basically a decade, right? And so this is where you get some really conflicting stuff going on in the market. Now, look at this chart. I think this one's very, very important. You're looking at forward Ps for the S&P 500, right? Growth versus value. And look at the divergence there. The divergence in that chart is the biggest we have seen since the tech bubble. This is the type of stuff that, by the way, these charts are from Yardini Research. Yardini Research, thank goodness they put all this stuff together. It makes my life a whole lot easier than me trying to go back and grab data from like a million years ago. So this is something that I think is just really, really important to look at and understand how much of a divergence is going on in the market right now, growth versus value. This is not normal. This will eventually flip and we'll get to more normal areas here. It's just not normal right now, okay? And this is the type of stuff that eventually is going to get more in line. You're always going to expect growth to trade obviously richer than value. It's just gone a little insane recently. And like I said, it hasn't been this insane since the tech bubble days. That is some really important food for thought right there, all right? Now, simultaneously, what else have you had happen? You've had an immense amount of companies go public in the past 1 to 2 years, 2020 and 2021, big years for IPOs. 2020 especially, right? Not just IPOs, but SPACs. I mean, look at this. Look at how many SPACs and basically IPOs happened in 2020. It went through the roof. Through the roof. I mean, way overtaking even 2014, which was a massive, massive year. And so last year, you had so many new companies hit the public market. That means all these companies have to try to find their investor bases, which if you understand, like it's usually hard to find an investor base in the first year. Usually year 2 of being a public company, you start to really pick up a lot of investors that are going to be in your stock long term, whether it's funds, institutional investors, high net worth individuals, or retail investors, right? You start to pick up a lot of those folks that say, hey, you know what? I understand this business. I understand where they're going. I understand why this company is going to be a great company in future years, right? And so that's really exciting. But in that first year, it's usually not like that. Here's the even worse part, okay? Obviously, you have to try to get people's attention and get them to understand this, right? But on top of this, if you have this amount of companies going public, like an insane amount, then you're in a situation where you're fighting for dollars of all these other companies, right? Think about it in terms of you might own a portfolio. I obviously own a portfolio of stocks, right? I might own, 20 stocks or whatever, right? Of those 20 stocks, I have a finite amount of money I can put in those stocks, right? Let's say it's $10,000 in a month. Those 20 stocks are fighting for my $10,000 to go in them, right? Then on top of that, all the other stocks that exist in the stock market are also trying to fight for my attention, right? And so when you have so many companies go public in a given year, it creates a situation where there is a finite amount of money to go around, right, to be invested in these companies. And all these different companies are attracting everybody's attention. So people are like, I don't know if I want to buy this one. I think I want to buy this one instead, or buy this one. And so you have this kind of overwhelm in terms of how you can get people to invest in your particular stock and get the attention out there. And this is really, really important. No one ever talks about this. But at the end of the day, there's a finite amount of money that can be invested in stocks. And if there's a million new stocks that are public out there, you have this amount of money that is going to try to be spread out in these stocks. Plus, people are looking and they're like, man, with all this uncertainty, I think I'll just buy Apple stock or Microsoft, companies that have been public for 100 years now. So this is a very, 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 very big factor that rarely people ever talk about. And I want you guys to remember this. If you have this crazy amount of IPOs, it means that's sucking money. That's sucking money out of all the other stocks that have gone IPO recently, or SPAC, right? Just basically gone public. And it sucks money out of a lot of other small caps or even mid caps for that matter, right? And so this is a very, very important factor there, okay? Now, you compound this with the fact of a ton of retail investors have gotten in the market in basically the back half of 2020 and into the early part of 2021, right? I always think YouTube's a phenomenal thing to look at in terms of what folks are getting into. Obviously, my man, Meet Kevin, okay? Dude, is a beast on YouTube and, creates a ton of, stock market videos all the time on different things going on, market opens, market closes. And if we look at my man, Kevin, he was going beast mode back in basically the back half of 2020 and into 2021, right? Everybody was really looking into the market because guess what? A lot of people had made a lot of money in the market in 2020. Then we had Rona go crazy, so a lot of people were forced to be home over the winter time. And you compound all that together, and it created this crazy storm of retail investors getting in the market, right? Unfortunately, they pushed up prices to insane levels, and a lot of those people have gotten absolutely destroyed. Look at, CNBC. I mean, my gosh, they added 160,000 subscribers in the month of January. Added so many new folks to the market, right? This guy, Chris Sain, this gentleman, I never heard of him before, and all of a sudden his channel just went crazy at the back half of 2020 and into the beginning part of 2021. I mean, he just went woo through the roof. I mean, 141,000 subscribers in January. But what you had happen is you had a bunch of people getting into the market, pushing a lot of these stocks up to crazy levels. A lot of those folks have gotten flushed out of the market now, right? The world opened back up. A lot of those folks, probably think the stock market's a scam because they probably lost money. Let's be quite honest. I mean, if you were buying stocks in January, February, and you look at where a lot of these stocks are now, high probability you lost a bunch of money. So folks are looking at this and are like, man, stock market's a scam. This is a bunch of crap in the stock market, right? And so This is something that have happened, and I know, even myself in my channel, I look back at the analytics. I didn't really pay as much attention at that time, but there was days when I was getting like 2,000 plus subscribers, and I wasn't even going very hard on YouTube last year compared to like a lot of folks, right? And I'm like, holy smokes, like 2,000 plus subscribers in a day. That's a pretty large amount during that time, right? But it's just a lot of folks want to get in the market. All that money is pretty much gone now. It's all either been tax loss harvested or just gone. And a lot of folks look at the stock market and are like, this is a scam, because they were buying into the hottest of the hot stocks, pushing valuations up like insane throughout January, February, and then March hit and just for so many of these stocks. And that's why we see stock after stock after stock down, 50, 60, 70, 80%. Literally, since where their 52-week highs were back in the, kind of very late winter time, early springtime. It's been insane, right? Then you compound that with, we already mentioned this tax loss harvesting, which is going on in a massive, massive way, in my opinion, right now. I mean, it just makes so much sense for so many people, especially the fact that so many people are down heavily on a lot of stocks. They're like, let me go ahead and tax loss harvest, funds doing and everything like that. And so you're getting a lot of these stocks pushed down to ridiculous valuations. And that's another reason you look at small caps, where small caps are trading at right now. You're getting roughly the cheapest valuations you've gotten in a decade. And it could get even lower over the next several weeks, because tax loss harvesting, like I said, it can go all the way up to basically December 31st. So yeah, this is still a massive, massive thing that's going on. And so it's just, you have this compounding. It's like an avalanche, man, where the avalanche is going down the hill and it's just picking up more and more snow and just making the issue with those sorts of stocks and the downfall even more vicious, right? And eventually the avalanche ends, right? It's not like an avalanche goes forever. It ends, it comes to a stop, and then the sun comes out and the snow is all done falling, right? And so that's something that's going on. You look at a Corsair game, I think CRSR, I think this is, like, if I think of a stock that is caught up in this the most, I think it's this stock right here. I can't think of a better example. And there's a ton of examples I could give you on a ton of these sorts of stocks. But I think Corsair Gaming is just the epitome of this sort of stock that is caught up into the avalanche, right? That's going on right now. They went public in 2020. They're a small cap stock. Inflation, has been hurting them, and the cost of shipping and all those sorts of things, right? Plus, there was worries about, well, if the world opens back up again, or is anybody going to use gaming and streaming products, which is another thing. I'm like, what? That's just ridiculous. But anyways, that's just another fear factor that was out there. And then you get into massive tax loss harvesting, because every single person who's ever bought Corsair is down in the stock, right? And so, in a lot of folks that might have gotten into the stock when the retail boom was happening, the stock went to high 30s and it went into the 40s, right? And so a lot of folks have cost bases, especially if they didn't buy as a stock dip, of 30s and 40s on the stock. And so it ends up becoming a tax loss harvesting candidate, and a candidate where folks might have bought this stock. They didn't really know anything about stock market investing, and like, oh, this stock stinks, or stocks in general just stink, man. I'm out of the market. This is a scam. I lost money, and that's what happens. And so Corsair Gaming, the fundamentals, you look at the fundamentals of this company, it's extremely exciting. The valuation is extremely exciting. The business model, this isn't like some business model that's like here today, gone tomorrow. It's a profit beast. There'll be a profit beast next year and in future years. It's a revenue growth story over time. Industries that are growing, like literally everything you look at this company is insanely attractive. Except the stock price doesn't reflect that, essentially. It's just been an awful stock price, just caught up in an avalanche, right? Now, what happens with a stock like this? Well, 2022, this company is going to hit 2 years being public, which is big because, like I said, in that first year of being public, it's really, really hard to find a long-term shareholder base, right? You might be able to get some folks trading around it, but it's really, really difficult. So now this company is going to be coming up on hitting 2 years public. It'll start to find more and more of its long-term investor base that's like, hey, I really like this Corsair Gaming. I want to hold this stock for the next 3, 5, 7, 10 years, right? And a lot of funds will start to really look at this one in a real way, because now they're going to have many, many, many quarters of being a public company behind them now. They're going to have gotten through the whole, last year, and folks are going to look at this and they're going to be, okay, I can understand how this company grows to this company, or, things like that, and I understand why this company is undervalued. You have tax loss harvesting is going to be done. That's going to be done within the next couple of weeks. In this particular stock, like I said, every single person that's basically ever bought this stock is down on this stock, okay? But with that being said, there's a few more weeks left of tax loss harvesting. That's going to be done, right? And then remember, all that money goes to the sideline and then it comes back in, right? Very, very important to remember. Inflation worries subside. So right now, obviously, this has been the year of inflation. Those worries are going to start to subside more and more, in my opinion, in 2022. There could even be, I think there actually will potentially be a talk more about deflation, especially in the middle to back half of 2022, which is going to be a big flip that's going to happen in the stock market, where all of a sudden everybody's talking about inflation, to like, oh, now there's almost no inflation or very little inflation, to potentially, oh my gosh, are we actually going to go for deflation? That's going to be a big flip for the stock market to get over, like, wow, what a change, okay? So the inflation worries also subside, and then the comps get easier and easier as the year goes on for Corsair Gaming, which is another huge bullish vector for the stock. And so you go from this stock being a stock that basically had everything working against it, to also in a stock that in 2022, everything's going to be working for the stock, and it's a beaten down dog stock. So think where that stock's going to go over the next year or so, right? And so not just over the next year, but over the next several years. But this is why you can get some of these stocks to go up in a really fast fashion, okay? So 2022, large caps are not the opportunity. Not to say you can't make money in them. Like if you buy Facebook stock, you're probably making money in Facebook stock in 2022 and in other years in the future, okay? So it's not saying you can't make money there. It's just that's not where the real opportunity is. That's not where like the big money is going to be made in 2022 and in future years, okay? Number two, inflation and Rona worries will subside more and more in 2022 as the year goes on, especially. Basically, you got to get through the winter time when it comes to Rona, but as we get through the winter time and into the springtime, the whole worries start to subside more and more and more. It's already kind of started a little bit. You have these, flashes of the recent one, right? The new variant, and everybody's talking about that and like what's going on with that. All that stuff's going to subside more and more throughout 2022. Inflation will, in my opinion, subside in 2022. And that will be something that it goes from being a big debate to like a very small talk, okay? Then number three, the long-term growth stocks is where the real opportunity is. Small cap, long-term growth stocks. So this isn't the sort of stocks that like, it's a question about could they actually keep growing. The companies that, if you're going to look at these companies and it's like over the next 5-10 years, they have, a double-digit type growth going for years and years to go in the future. Those are the sorts of huge opportunities in this market that money is going to start flooding in these in a massive way in 2022. And everybody that's pretty much wanted to take losses on these stocks will have already taken losses. So which means you're going to have a fresh new shareholder base coming in to invigorate these stocks with actually very small amounts, if any, selling pressure. And if you have very little, if any, selling pressure on these stocks, and you have all these folks looking at these stocks that are super cheap, what do you think is going to happen with the stock? Like, you just got to put two and two together in these situations, okay? Then, basically, a lot of these companies have went public in the past year or two, and now a lot of them are hitting 1 year, 2 years since they went public, which is a great time where these companies really start to find their long-term shareholder bases, and folks really start to buy in. You got funds that really start to buy in a meaningful way, okay? And last part here, shorts could make the runs in these stocks more insane than ever. Remember, there's a ton of folks out there that are heavily short a lot of these small caps, right? And unfortunately, they're about to have happen to them, in my opinion, what a lot of the retail investors that were going long in early, in late, basically 2020 and into early 2021, and a lot of those folks got destroyed, and a lot of these, stocks that got insanely overvalued, right? Well, the shorts are all piling into a ton of these stocks here in late this year, right? And might continue to pile in January and February. And I think the flip side's going to happen to them. The flip is going to happen, and all of a sudden they're going to get absolutely wrecked. And what it's going to create is all of a sudden you have all these buyers come into these stocks, all the tax loss harvesting where people have been putting money on the sideline for these stocks, right? They have to, because basically there's a wash sale rule, so you have to wait 30 days to buy that stock back. That money all of a sudden comes in. You have money rotate from some of the large caps into a lot of these small caps because that's where the real opportunity is. You have everybody coming in that's looking at these stocks and see them as a long-term opportunity and beaten down valuations that are just insane, especially when you consider the growth these companies have. And then you have this massive short position all at the same time. What do you think is going to happen here? Okay? And so, needless to say, there's going to be a major flip that happens in 2022 and going into the next few years. It's going to be quite compelling, and it's going to create A market in which the thing I think a lot of folks got to understand about the market in 2022 is the S&P 500 and the NASDAQ doesn't have to have an insanely great year for a lot of these small caps to go up 100, 200, 300% in 2022. I mean, these markets could be flat or slightly up, and we will likely see money just flood into a lot of these stocks and push these stocks up to valuations that make more sense. Or maybe even overvalued. I don't think a lot of that will happen. I don't think these stocks are going to go on some crazy run that it makes them like massively overvalued. But I think a lot of these small cap stocks will go on a pretty epic run because you just literally every single thing is lining up perfectly for them at the same exact time. And that creates a situation where, you know, a lot of these stocks are set to fly and you're going to have a flip in the market. And yeah, so it's going to be interesting to see how it all plays out. Obviously, you guys know where my money's positioned. I've been positioning my money for many, many months now throughout actually most of this year, but especially over the past, you know, let's say 6 months into a lot of the smaller cap companies, a lot of the under $10 billion, because that's where I see the real opportunity, and that's where I think the gains are going to be absolutely epic over the next few years. And, you know, I'm somebody that always puts my money where my mouth is, and we'll see what happens. That's all I'll say about that, guys. But yeah, I hope you guys enjoyed this video. This was an absolute beast of a video for me to put together here, guys. Don't forget to subscribe to the channel. Once again, the massive Black Friday, Cyber Monday sale, it ends tonight. So if you're looking to take advantage of that before it ends, definitely take advantage of that. And have the future you thank you. Much love as always, guys, and have a great day.